Your market news now. Asian shares were mixed, with Hong Kong and mainland Chinese equities lower, reversing yesterday's rally that was inspired by Beijing's attempt to rescue the property sector. Japanese stocks rose in catch-up play after yesterday's national holiday. Meanwhile, oil continues its slide on news that OPEC Plus will hold its delayed meeting online rather than in person. The delay and discord between members over quotas has cast doubt on the prospect of further production cuts. To help us look back at the week that was, we are joined by Patrice Rousseau, who's the Chief Investment Officer at Ashburton Investments. Patrice, thank you so much for your time. I mean, in the absence of some kind of direction from Wall Street, given the Thanksgiving holiday, what's your sense of market sentiment right now?
Good afternoon, Natasha, and to your viewers. Yeah, market's very quiet with traders on Wall Street on holiday due to Thanksgiving. So direction has really been coming from the Asian markets, where we've had a sharp sell-off at the open, really to tech stocks selling off in China and in Hong Kong, which was a bit of a surprise given the general positive outlook after the government decided to have what they call a white list of property companies that will be helped. And these have been struggling under the burden of debt. So a bit of a pullback in Asia, but the JSE seems to be bucking the trend so far.
Let's look ahead a little bit into 2024. We've got markets pricing in all of these rate cuts, and we've been talking about it for quite some time. And I'm curious whether you've gotten, given any thought to what kind of mispricing we could see between bonds and equities if these cuts don't come at the time that the market is expecting them.
Yeah, it's a very interesting question. Especially if you take U.S. markets, they've been expecting a rate cut really from over a year ago, and expectations were then that the Fed would start cutting rates at the middle of 2023, which obviously we all know hasn't happened. Right now, markets are discounting rate cuts into the middle of 2024. That's a much more likely scenario, but I think it's very much, as the Federal Reserve Governor always says, dependent on the path of inflation. While inflation has come down, the headline inflation number has come down quite drastically. I think the focus is on what is called core inflation, which excludes the more volatile components of the inflation basket. And the big component there is housing rental. So the concern is that will take some time to come down. I think its expectations have been fairly bullish, but I think before the Federal Reserve considers cuts, it will have to be quite certain that core inflation, the non-volatile component, is under control and is within its target range, which is long-term to have around a 2% or below 3% inflation level.
So we've been talking about some of the pressures we've seen in the oil price. I mean, when does it start to have an impact on risk appetite?
Now, oil price, as discussed, I think that was a big factor in driving inflation around the world. So the primary impact is obviously petrol at the pump, but then the secondary impact in terms of manufacturing activity, food, and the like also had an impact. Now that's behind us, because on a year-on-year basis, the oil price hasn't gone up. Although, I mean, as you mentioned, Nastasia, in your introduction, there seems to be some rumble within OPEC whereby Saudi Arabia, as the lead producer, is finding it difficult to have the other countries around it to comply with agreed production cuts. And then there seems to be, especially you look at the big producers, the UAE, Iran seems to be on an increasing pathways. And then there's the discussions with the African producers, Angola, Nigeria, again, as to whether they would comply with cuts or also increase production. So that's a bit on the knife edge, and slightly concerning for markets if whether that will happen or not. But obviously, if oil production increases, then oil price will come down. So we're not too sure there which direction that's going to go.
As we wrap up, one event that you're looking out for going into next week?
Yeah, I think next week we have a slew of results on the JSE. Some big names reporting. We have an update from Standard Bank, also NASPER's process. So I think what we've seen in the past week is that several of the retailers have been hamstrung by slow demand, by our situation in the ports, which has made it difficult to bring in goods.
Yeah.
So we're trying to look beyond that at the broader economy and how these companies outside of retail are performing.
All right, Patrice, let's leave it there. Thank you so much for your time. That is Patrice Rousseau, who is the Chief Investment Officer at Ashburton Investments. And with the Brent crude price sitting at 81.45, we're flat on the day for now. But again, it's on the back of that delay in the OPEC Plus meeting that has been moved to next week, and it's also going to be online. We're going to take a quick break. When we come back, we'll have more news for you, so stay tuned.